Good morning, everyone. This oral argument is called to order. I am the Vice President of the Montana Public Service Commission, Jennifer Fielder, and I am the presiding officer for this oral argument. With me today, we have Commissioner Molnar. We have our staff attorney, Teresa Umans, advising the commission. We have Commissioner Wellborn and Commissioner Bukacek present. Commissioner Pinocci is absent. For the record, the time is 10:34 a.m. The date is Tuesday, December 9th, 2025. The commission and its staff are appearing from the Commission Bollinger Room in Helena, Montana. This is the scheduled oral argument in docket number 2025.09.063 involving Northwestern's motion for temporary waiver of tariff provisions for its PCAM. Any questions from the commissioners will be focused on understanding the arguments for and against the motion. The commission will have a work session mid-January to make a determination on the motion. I would remind commissioners we have very limited time today as discussed in the scheduling meeting, so detailed questions should be developed in writing so that we can follow up, have staff follow up with the parties after today's proceeding. Thank you all to the attorneys and the parties and the public who are joining us today. We're happy to have you. As the presiding officer of this oral argument, I am in charge of preserving order and making sure the argument proceeds in an efficient manner. I expect all participants, commissioners, and attendees to be respectful and professional and keep in mind the established time constraints we have today. Before we proceed, I will ask for public comment. Is there any public comment? Is there any public comment? Is there any public comment? Seeing no public comment. Please note that this session is being recorded and do not include any confidential or private information in comments. If you have confidential or private information, then we will need to go to closed session. We will begin today. Let's see. We don't have commenters, so we'll move on to the oral arguments. I will now take appearances of counsel. Counsel, please introduce yourself and who you represent. First, the movement, Northwestern.
Madam Chair, Commissioners, Mike Green and Sarah Norcott on behalf of Northwestern Energy, the movement.
Thank you. And intervener, MEIC and Sierra Club.
Good morning, Vice President Fielder, Commissioners, Jenny Harbine and Ben Scrimshaw for MEIC.
Thank you. And intervener, MCC.
Yes, good morning. Thank you, Madam Chair. Please enter the appearance of Jason Brown for the Montana Consumer Council.
Thank you. As all parties are aware, each party will have 15 minutes to provide its oral argument and answer any questions from the commission. If a party exceeds the 15-minute limit, I will ask that it conclude its remarks and expect it to do so promptly. Do any of the parties have any questions before we begin the oral argument?
Madam Chair, I would like to try to reserve 5 minutes for rebuttal after the interveners have provided their argument, if possible.
Are there any objections? We will attempt to accommodate that. Mr. Green. Okay. Since it's Northwestern's motion, Northwestern may proceed with its oral argument.
Madam Chair, Commissioners, thank you for being here today. We're here today to explain and answer questions the Commission might have about Northwestern Energy's request to approve a narrow, temporary, and equitable tariff waiver. We believe this is a solution that protects customers, supports resource adequacy and acquisitions, and prevents unnecessary harm to Northwestern Energy's financial health. Commissioners, we acknowledge this is an unusual request, but we submit to you it's necessitated and justified by unique circumstances. Those are that on January 1, 2026, Northwestern Energy will acquire Avista's current 222 megawatt share of Colstrip for zero capital cost. As a result, we will have sufficient capacity to serve our customers' needs, meet our RAP resource adequacy requirements, and regularly sell excess power into the market. What's unique about this situation is that we are acquiring this asset for zero capital. So while the acquisition will provide substantial immediate benefit to customers, it will not provide any return to the company or its shareholders. As a result, this waiver really is not about Northwestern Energy making money or about our profit. It's a request for an opportunity to minimize our losses and an opportunity to try to break even until new rates are put in place in these unique circumstances. We hope the commission and interveners will ultimately view this waiver request as a way to support Northwestern's decision to place its customers' interests ahead of its own with this acquisition. And we're being asked to use some of the revenue that this acquisition is going to create through excess capacity to offset our costs of operation until the commission has a chance to fully recover the rate impacts of this new resource. Without this waiver, customers will receive the substantial benefits, but the company will suffer the full cost and full burden with no opportunity to ever make that up through a return or through the PCAM sharing. I want to clarify, this is not a request for a rate increase. This is not a request to recover these costs from customers directly. It's a request to allow us an opportunity to cover the new costs of Colstrip from the new revenues that are going to exist, which would not exist without this planned addition. To the guts of our request, we've identified 3 long-term contracts which we were able to enter into as a result of this excess capacity. Those contracts are identifiable, we're able to track those, and we're able to report those. Our ask is for the revenue from those 3 contracts and those 3 contracts only to be excluded from the PCAM for calendar year 2026. As you've seen in our motion, we've proposed to then use those revenues less some fuel proxy to offset or attempt to offset our new O&M costs for the new Colstrip acquisition. Any excess revenue from those contracts and all revenue from any other contracts or wholesale sales that Northwestern Energy makes during 2026 will continue to flow for the benefit of customers through the PCAM. In this way, our waiver proposal matches the new revenue with the new O&M and provides rate stability for the customers because they don't see that big chunk of revenue coming in as a PCAM credit while facing the prospect of paying O&M in the future. But customers will continue to only see upside because the customer will bear the burden of any shortfall of those revenues over O&M. This motion does not.
Mr. Green, excuse me, did you say the customers will bear the burden of any shortfall?
If I did, that was a mistake. The company will bear the burden of any shortfall.
Thank you.
Sorry. Thank you, Madam Chair, for catching me on that. So this motion does not raise customer rates. It does not authorize the recovery of O&M through the PCAM. It does not commit the commission to future recovery of O&M costs without a future review. And it does not guarantee us a full recovery, to come back to the point that I just flubbed. Northwestern bears the risk of any shortfall in this proposed mechanism. Now, there have been a whole bunch of questions and comments about this request, from why didn't you do this with Puget to why would we allow the benefit? Why would we allow you to benefit from contracts that the commission hasn't reviewed and a whole host of others? I'm going to try to address some of those today, and I'm happy to answer any questions you have. First, and I don't want to get us too far down this path, but there have been legitimate questions about why did we not do this with Puget. I want to emphasize, until we have certainty about our ability to serve large load customers, we do not believe it is prudent to bring the Puget share of Colstrip into the utility. This share was acquired to obtain majority control over the plant, which we believe is vital to have local control to protect the integrity and continued viability of our existing share of Colstrip and this new acquired Avista share, which we do need to serve customers. As you know, the Avista share was identified as a needed resource in our 2023 IRP, and it continues to be needed today to serve customers and meet our adequacy requirements. I submit to you that immediately bringing that asset into the utility on January 1 and holding the Puget share outside the utility and protecting customers from those costs for the time being are both reasonable and prudent decisions. And that decision about Puget should not impact the commission's decision on whether or not the utility will be allowed to offset some of these new O&M costs until the commission is able to do a full review. Interveners have also submitted that the commission cannot allow this waiver without a prudence review of the O&M or the contracts. We believe this is wrong. The PCAM mechanism has always been an interim mechanism, and the commission has always reserved the right to go back and review the prudency of costs and credits that run through that PCAM on a regular basis, and the commission has taken advantage of the opportunity to do that. We submit that the same approach is appropriate here, and that the interim relief is what we are seeking here, an interim exclusion of these revenues until the commission has an opportunity to fully do a prudence review at a point in the future. They have also argued that that there is something imprudent or improper, and the commission must review the the designated contracts that we've entered. The only thing different about those contracts and the $60 million of wholesale transactions that ran through the PCAM in the last PCAM year really relates to the duration of those contracts. That duration, the certainty of those revenues is allowed because of this new excess capacity that we have obtained through the 222 megawatt addition of the Avista share. And so those are FERC regulated wholesale contracts. Those are contracted under our FERC jurisdictional rates, and we believe those contracts are and continue to be appropriate. And we expect that the utility will continue to enter into contracts for the benefit of customers, which will also run through the PCAM. What they're really suggesting in their arguments is that it's acceptable for customers to receive the benefits of those contracts without commission review, but it's unacceptable for the utility to be able to benefit to offset any of those costs without commission review. We disagree clearly with that approach, and we submit that under the regulatory compact that we all engage in, and that this commission has regulatory authority over Northwestern, it must also disagree with that. I'm happy to answer any questions that you have, but we hope, and I joined this utility largely because of this, we hope that the commission and customers will ultimately join with us in celebrating Northwestern has finally reestablished a self-sufficient, vertically integrated utility, which benefits a substantial portion of Montana and a majority of Montanans through reliable, cost-effective electrical services. And we respectfully ask you to recognize the company's decision to place customer needs ahead of company needs and acquire this asset for zero cost. And we ask you to grant our motion to allow us an opportunity to cover some of those new costs until the commission has an opportunity to review this in a full rate case. We thank you for your time and attention this morning, and I'm prepared to answer any questions that you have.
Thank you. All right, Northwestern, you've reserved 6 minutes for your rebuttal, and we're going to reserve commission questions after we hear from all parties. So we will proceed with MEIC. You may proceed with your oral argument.
Thank you, Madam Chair, Commissioners. Northwestern's last-minute proposal for rate treatment, in this case for its Avista Colstrip share, is part of a disturbing pattern of the company treating this commission's oversight and stakeholder engagement as afterthoughts in its decision-making processes. Northwestern signed its agreement to acquire the Avista Colstrip share in January of 2023, and it let nearly 3 years pass before seeking any rate treatment for the Avista share at all. And now it asks the commission for extraordinary and unprecedented rate treatment for that share in order to avoid purported harm to the company without any discussion of the impact to ratepayers of the proposal or the precedent it would create. This aligns with the company's approach to the Puget Colstrip share, which the company spun off into an unregulated affiliate under FERC's jurisdiction without even telling the commission, let alone asking for approval. And notably, the same infirmities that the commission has noted with its Puget transaction may be present for the Invista transaction, yet this commission has not yet had the opportunity to review those concerns. Northwestern justifies its 11th hour request in this docket by claiming an urgent need to cover significant fixed costs, around $18 million for the Avista share. But Northwestern's proposal seeks to solve a problem, if there is one, of Northwestern's own making. The commission should reject Northwestern's proposal because it has no precedent in statute, regulation, or the commission's prior actions. The commission should reject Northwestern's proposal because neither the Avista share nor the costs at issue have been subject to prudence review, and therefore we can't say whether these costs would result in just and reasonable rates, which is the commission's ultimate obligation in this case. And Northwestern hasn't provided the necessary evidence to support the relief it seeks. So first, there's no statute, regulation, or commission precedent that would authorize Northwestern's proposal here. The proposal would use funds that are owed to customers that would normally flow through the PCAM to pay itself for fixed O&M costs associated with the Avista share that aren't otherwise recoverable through the PCAM tariff. And because the company hasn't yet sought prudence review for the Avista share, these same costs are also not yet recoverable through base rates. You heard Mr. Green say that it's not charging customers directly for these fixed costs. They're just removing certain revenues from the PCAM and using those revenues to pay for the fixed O&M. But to the customer, it's a distinction without a difference. There's no dispute that if Northwestern's motion isn't granted, the designated revenues would flow to customers through the PCAM, and they would be used to offset significant supply costs that customers otherwise see on their bills. Instead, these revenues would be used to pay costs that Northwestern couldn't otherwise charge its default supply customers at this time. I want to be clear that this case isn't about whether Northwestern should get cost recovery for the Avista coal strip share. This commission can make that decision in the appropriate docket. And Northwestern has or has had several options for appropriately demonstrating its entitlement to such recovery. It could have sought pre-approval for the Avista coal strip share so that it could recover costs on day one. It could file a general rate case or perhaps even a standalone approval docket and demonstrate that the entire Avista coal strip share is used and useful for Northwestern's customers and prudent. And the commission, in its discovery request to Northwestern, pointed to a third option, which is to file a one-time PCAM base adjustment, similar to what the commission approved and certain parties negotiated and settled on in the last 2022 rate case. Northwestern has not opted for any of these options that would allow for appropriate commission scrutiny. Instead, it requests cost recovery for a brand new generating asset in its portfolio in the context of a PCAM docket, a docket that is fundamentally designed to true up deferred account balances and ensure the company's past costs and credits are just and reasonable. Northwestern hasn't pointed to any authority or precedent for this type of extraordinary treatment, and the commission shouldn't create one now. The second point I want to make is that Northwestern's proposal would charge customers for costs where neither the generating asset nor the significant $18 million in annual fixed O&M have been subject to a prudence review. Northwestern's proposal is unlike situations where the commission has allowed cost recovery for certain costs that haven't yet been subject to prudence review. In prior cases where interim cost recovery has been allowed, it's been in the context of a docket where those costs will be subject to prudence review and subject to refund in a single docket, and that's not the case here. Northwestern's only argument that it shouldn't be required to demonstrate that these costs are prudent in this docket to support its proposal is that the costs aren't being charged to customers directly. But as I said, it's a distinction without a difference, whether you're putting those costs in the PCAM or diverting revenues owed to customers, the result is the same, which is that customers are paying for costs that may or may not be prudent for an asset that may or may not be in its entirety used and useful. There is a striking lack of evidence in this docket for Northwestern's request. Northwestern supported its motion with a 2-page affidavit. As a result, we have numerous consequential unknowns. We don't know, as I alluded to, how much, if any, of the Avista share will be used and useful for Montana ratepayers. And we know, of course, that at least for these 58 megawatts, Northwestern is conceding that Montana customers don't need that. Montana retail customers don't require that energy. And that means that we don't know how often it will be economic to supply energy to default supply customers and to what extent. We don't know whether the Avista acquisition itself is prudent. Northwestern hasn't provided any lifetime present value revenue requirement for the resource, and it concedes that it hasn't even generated an annual revenue requirement for the resource, raising questions about Northwestern's own due diligence. There's been no evaluation of reliability of this asset, including concerns related to recent plant outages during peak load events, as well as regulatory risks. We don't know whether the $18 million in annual fixed costs is prudent. Northwestern refused in discovery to disclose owners' committee notes and agendas related to that expenditure. All we have is an operating budget, which includes no justification for these costs or their purpose. We don't know whether Northwestern ever intends to rate base the Avista share or how much of that share and when. And again, I'll remind the commissioners of recent events with Puget, where Northwestern had, since July 2024, told this commission it would bring Puget into rates and then decided not to do so. In a November 11th letter to this commission, Northwestern dropped a footnote saying it would create a subsidiary within the Montana regulated portion of the utility for the Avista share. We don't know anything about this subsidiary or what results it would have for Northwestern's retail customers. Northwestern proposes to exclude proxy fuel costs from the PCAM, but we don't know what the actual fuel costs would be, only that they increase as of January 1st. We don't know whether the designated contracts that are subject to the motion were actually enabled by the Avista Colstrip acquisition. Northwestern concedes the contracts will be fulfilled from Northwestern's portfolio, not specifically from the Avista share of Colstrip. The Bighorn contract has been operative since July 2025, meaning that it was in place before the Avista share was within Northwestern's portfolio. And troublingly, the rate terms in the contracts, which are confidential, appear unrelated to Colstrip operating costs. And I urge the commissioners to compare the confidential rate terms provided at MCC-027 with the estimated fuel costs that Northwestern disclosed in response to MEIC SC 008 of about $23 a megawatt hour. We don't know whether Northwestern's projections of revenue from market sales from the Avista shares will prove accurate, in contrast with the company's recent market sales projections, which have been shown to be wildly off base. In sum, this record is dramatically insufficient to allow the commission to determine whether Northwestern's proposal would result in just and reasonable rates. I was almost tempted, commissioners, at this point to ask for some additional process to allow us to answer these questions. But I think we all need to remember that this is a PCAM docket. Again, this docket is designed to true up deferred account balances to ensure the company's past costs and credits are just and reasonable. Critical stakeholders are not parties to this docket. The discovery and testimony opportunities are truncated. And even if additional process could answer some of the questions I discussed, fixed costs have no place in the PCAM. They've never been there. That's not where they belong. We urge the Commission to reject Northwestern's motion for tariff waiver and to do so before testimony is due at the end of the month to clarify the scope of this proceeding. Northwestern has avenues available to it to request cost recovery that allow for appropriate Commission review and stakeholder participation as interveners. The Commission should not, in this docket, set a precedent of bringing fixed costs into the PCAM, and it should not yield to Northwestern's 11th hour demand for haste to resolve a problem 3 years in the making. Thank you for your time, and I'm happy to answer questions.
Thank you. I think we're going to save questions for the end here. And so we will now go to the Montana Consumer Council. You may proceed with your oral argument, Mr. Brown.
Thank you, Madam Chair, and good morning, Commissioners. I apologize for not being there in person today, but as you can probably hear, I'm a bit under the weather, and I did not want to talk at you through a mask or count on that to protect any of you. So I appreciate being able to appear remotely today. I would say I think there's been plenty of misunderstanding to go around so far in this case, and I'll take some responsibility for not understanding all of the pieces of this proposal and what I think have really been kind of moving pieces to date, with a number of other aspects of this proposal kind of still up in the air. But I think the company deserves some responsibility as well for waiting so long to address this and for using what I feel is pretty vague and confusing terminology to describe what is being sought here. I think you can be sure that if I'm confused and my office is confused by this proposal, consumers are definitely going to be confused going forward. There's activity at FERC and a different approach being applied to the Puget share. And then I think it's important not to forget that we have tax trackers in the state, and we've had issues about this fixed wholesale revenue credit over the years as well. So there's a couple other places where the costs, the taxes on this new asset, any potential wholesale revenues from this additional share will come into play. And I think the Commission should take a comprehensive view of all of the different tariffs implicated by this. But I did want to say, I was a bit cynical at first about this request for oral argument, but I want to, thank the utility, and I actually do appreciate this opportunity today for all of us to have a bit of back and forth with the Commission. I think part of my confusion has been this difference or equating of normal spot revenue sales and market sales from economic dispatch of the portfolio and these contract revenues from these bilateral PPAs, which I agree are very unusual and I would say unprecedented. I've been thinking of these designated contracts like PPAs. They're basically PPAs by these third parties to purchase power, power purchase agreements from Northwestern. So I may call them PPAs as I talk about this today. It's my understanding that Northwestern thinks all of these credits, whether they're from traditional spot sales from excess generation into the day-ahead or spot market, and now these contract prices they're going to get, that they all fall into the same bucket. But in my mind, the contract revenues are fundamentally different and unprecedented. And I think lumping them all together just because of a tariff definition in the PCAM tariff, which did not anticipate this situation, is problematic. I don't think this was anticipated when the Commission first defined credits in the PCAM tariff. And it's possible that definition may be too broad in this situation. So I don't think that tariff definition should limit the options here or consideration of the best approach going forward. I'm mostly concerned about the lack of analysis and, as I think Ms. Harbine discussed, of proportionality between the revenues and associated costs. I think a primary issue here and going forward is going to be how to handle having so much excess capacity after having a capacity deficit for so many years, because there are market risks and other problems associated with being long and having way more power than the utility needs to serve retail customers. So I think the commission should be looking for a balanced and consistent approach to this new long position that we're facing going forward. I think these designated contracts could almost be thought of as hedges for market sales, which might have some value, but again, this is not something we've seen before. And the issue of the company having skin in the game when it enters fixed price hedges is certainly still a concern for us, because it's important to avoid selling power at a loss. And I mean at a loss considering all costs, not just marginal costs. So because we're talking about this additional share and the cost of service from it, it seems like that should be the same for everyone. The cost of service isn't going to be different for these third parties, for these PPAs, than it will be for us. So if these folks are paying less for the same power as we're getting, I think that's a concern. I don't think retail customers should be responsible for any shortfall if the negotiated contract prices are not sufficient to cover the actual cost of service to satisfy those contracts. I think a lot of this confusion could have been avoided, or at least the time pressure we're facing, if there had been a request for pre-approval of, I guess, just the rate treatment here for these designated contracts and for the additional share that's going to serve us, and perhaps some kind of interim relief that could have addressed some of the regulatory lag issues. And I think they also could have, I think there could have been a request for some kind of deferred accounting or regulatory asset in the most recent rate case, knowing there would be timing and cost causation issues starting on January 1st. So the failure to address this sooner should not become a reason for rushed decision-making or needlessly complicating retail rates or tariffs at this point. It seems like we all do agree that anything the commission does in response to this motion should be on an interim basis, and that all arguments that we're talking about should be preserved going forward. For example, the concerns about cross-subsidizing these contracts. So I think that's important to keep in mind for the commission, and I think we all agree that we're not trying to finalize rate treatment starting on the 1st, and that this will be interim, whatever is done. But I think the takeaway here, my main concern is really about cost causation and used and usefulness, not so much prudence. And I didn't mean to emphasize prudence here so much. It's really about cost causation, wholesale retail allocation, and the used and usefulness of this share for Montana customers. The proposal to segregate credits starting on the 1st is relatively straightforward. I think I understand that because we'll be able to see what revenues come in. But I remain concerned about wholesale costs, the cost side, not being fully accounted for or excluded from retail rates going forward. I do appreciate the company's effort to account for fuel costs and to defer consideration of fixed O&M, but I don't think the revenues from these contracts should just be tied to fixed O&M. They should be looked at as offsetting, or at least be compared to all costs associated with the 58 megawatts that's not going to be available to retail customers. There's other costs besides fixed O&M that those contract revenues should be covering. So I don't know that we should single out fixed O&M as to earmark those revenues at this point, or assume that it's all going to go to fixed O&M. And so without a full proposal to allocate both costs and credits associated with these contracts, I think the commission's in a difficult position when it comes to the rate making here. I'm also concerned that this 58 megawatts is not going to be available or used and useful to retail customers in Montana, but that 100% of new coal strip costs, for example, the full 18 million in fixed O&M, will continue to be requested and discussed in these state proceedings. Because we haven't had a normal contested case process, we don't have an evidentiary record, there's still a lot of questions. And even though the company's had plenty of time to address this and account for these costs and these contracts much sooner, I feel like there's still a lot we don't know, including what FERC might do, what the proposal is for taxes, and how this might eventually be accounted for through some kind of the wholesale revenue credit, or if that's implicated. I don't think consumers should be held responsible for whatever time pressure or financial uncertainty that we're now facing, that the company's now facing. I think an important benchmark or starting point for your consideration is what happens if you don't do anything, if you deny the motion or make no changes to the tariff for now. Where would that leave us? I think the fact that PCAM adjustments are interim can be used to sort out the allocation of at least variable costs in the next annual PCAM true-up, and that the allocation of other costs like fixed O&M and other things can be addressed and deferred whenever they actually seek those costs in our rates. And hopefully they only seek the portion of costs that are to provide service to us. So I'm concerned that adding or subtracting things from the PCAM now without a full evidentiary record could create inappropriate or unreasonable expectations about which revenues are being tied to which costs going forward. And I think it's unfortunate we don't have a better sense of a full, complete allocation of costs and credits by now. If I would say that if there is a shortfall on the wholesale side, then the company should definitely bear that shortfall going forward, not retail customers. So I'm not convinced that the commitment to bear this shortfall is really a concession, because I don't think retail customers should ever be responsible for the contract revenues not covering the actual cost of service. And I think the commission should do everything in its power at this point and going forward to prevent retail customers from cross-subsidizing or backstopping these contracts, and should require Northwestern to present detailed dispatch and cost data, and to present a detailed allocation proposal in its future filings. I think getting that actual dispatch and cost data will be helpful to understanding how to protect retail customers from needless market exposure, and from, again, subsidizing the cost of service to these for that 58 megawatts. So I'll leave it at that, and hope to be able to answer questions you may have. And I don't envy the position the commission's in having to rule on this unusual request. I think we all agree under this time pressure, assuming this pressure is actually necessary, or a decision's necessary at this point, given the lack of record we have right now. So thank you all, and I look forward to your questions.
Okay, thank you. All right, members, we will go to rebuttal. Northwestern has 6 minutes. Philip, if you'd set the timer for 6 minutes, please. And then as time permits, we'll go to commission questions, and commissioners, just keep in mind, we're looking for questions that would clarify what's been presented in the motion, in the response to the motion, or in the oral arguments today, not new topics or new discussions, new ideas. Okay, and with that, Mr. Green, you may proceed with your rebuttal.
Thank you, Madam Chair. Very quickly, I want to go back through. I think I almost feel like we have alignment with the MCC's position today. So Northwestern is not at all opposed to a true up or a review, to an examination of the costs that we're proposing to offset against these revenues. We also agree with him that this is unusual and that these long-term contracts probably, those were certainly not what was anticipated or typical when the PCAM was developed. They are, however, FERC account 447 revenues. So those by definition are those revenues from these long-term contracts will run through our PCAM unless our waiver is granted. So that's why we were able to pull, that's why we identified those 3 contracts. We pulled those off because they can be separately tracked, and we agree with the MCC they are unusual for this utility. It's worth noting these are not unusual for utilities generally. Almost every utility which is long on capacity also contracts away that excess capacity on a long-term basis. Several of the owners of Colstrip do exactly that, and some of our counterparties who we're acquiring from have done that historically, where they've contracted away excess capacity. That's necessary because it is impossible for a utility to precisely match load and generation. Generation is acquired or built in big chunks. Generation additions are lumpy. You don't have a choice to take, well, we only need 112 megawatts. So Avista, we'll take 112, you keep the other 110. That's not an option. You have to develop the resources that are available. And the way that utilities always deal with those excess capacities then is through economic dispatch and market sales. That's exactly what Northwestern Energy has done. Again, we've entered into market sales on a long-term basis to protect our customers, in a way to protect against the costs associated with what will be excess capacity in the short term. There were several questions about why not something else. And respectfully, commissioners, I submit to you, there's a lot. Every other choice that's available to us is expensive, time-consuming, and ironically has been heavily contested by the interveners in this case. Pre-approval dockets, pre-approval legislation, and all of those have been heavily contested by interveners through the history of this utility. We strongly believe in the prudency of this investment. We strongly believe in the value of this addition to our resource. We know that it's needed, and we know that it will have value, and these expenses are needed. The notion that we would come and beg this commission's pre-approval for relatively minor cost increases in the face of our ability to generate revenues through excess capacity really makes no sense to me. As you all know better than I, because I wasn't here at the time, the last rate case was highly contested and settlement was hard fought and difficult to get. The notion that you could just throw one more item into our last rate case, I think does not bear any consideration at this time. One of the commission's data requests referenced back to the prior rate case in which a specific PCAM cost adjustment was authorized as a one-time measure for the addition of the YCGS plant. There's 2 problems I see with that. One is legal. The first is that is not an option available to us for this resource. We can't put O&M into the PCAM without the commission's approval. So we didn't have that mechanism available to us. We do not have an order in place that authorizes that, like was authorized for YCGS. More importantly, doing that actually would have imposed the burden of the new O&M on customers without the opportunity for prudency review. We feel like the methodology that we have proposed is more equitable and fair to customers because we're not asking them to take on the risk of O&M. We're asking them to share the benefit of this plant with the company to allow us to cover the risk of that O&M that we have taken on. So we agree again with Mr. Brown's comments. We shouldn't be adding or subtracting items to the PCAM. We absolutely agree with that. But we can track individual unique items that would otherwise go through the PCAM that would result in an absurd outcome for the company and for customers in order for us to do that. I want to go back. Mr. Brown, I think artfully said, tariff definitions should not limit our options here. We totally agree with that. We think that requiring all FERC account 447 revenues to flow through a PCAM, which was designed for a capacity short utility, should not continue into this new era of excess capacity. And we believe that our proposal accomplishes that goal. In conclusion, commissioners, our waiver request is about fairness and balance. It's about providing substantial benefits to customers and the company placing customers over itself. Customers will enjoy the benefit of Colstrip immediately. It will, and all we ask is for the ability to offset some of those costs on a temporary basis from those benefits. This waiver is narrow, transparent, and temporary and transparent. We believe it's good policy and good sense, and we would request the commission grant our motion.
Thank you. You were only about 4 seconds over your time, so good job.
$1,000 a second, that would be worse.
All right, we have about 8 minutes for commission questions. That'd be 2 minutes per commissioner. So please keep your questions tight, and parties, if you would keep your answers tight as well. We will move on with any commissioner questions for clarification on the motion that's before the commission. Are there any questions from commissioners? Commissioner Molnar.
Thank you, Madam Chair. So that Sarah can earn her keep, either Sarah or Mr. Green. Ever since we found out about this, it's basically been a dumpster fire. You apologized 3 times when we had our evening work session before while we were talking about intervening. At the level.
Commissioner Molnar, Commissioner Molnar, I'm going to stop you right there.
Okay.
Commissioner Molnar, the comments and questions are regarding this docket, not another docket. So we're in the Avista share of Colstrip and the request for tariff waiver. And please refrain from bringing up other dockets and from inflammatory remarks, if you would, please.
To wit, the 222 and the 370 transfer on the same day. So they are interrelated. So, and it goes to credibility, which is what I was trying to get to. We weren't told about your plans to go with market as opposed to rate base. We were under the assumption that would happen. The legislature said you couldn't have, with the definition of a utility, public utility, a shell company. That died. You've done it anyway.
Commissioner Molnar, you have 23 seconds to finish getting your question asked and answered.
That's fine. So this, as Mr. Brown said, waiting so long. It wasn't when you filed that this started to happen. On July 11th is when you incorporated the shell company with your statement that we should wait to see after you have sold the megawatts.
Commissioner Molnar.
Credibility and the reliability
Commissioner
of
Molnar.
that question.
Commissioner Molnar, your time is up, and there was a very poor example of asking a question on this docket to get clarification on this docket. And commissioners, if any other commissioners have questions, I ask you to please respect the advice that is given by legal counsel and the chair that the questions will be confined to asking questions to gain an understanding of the motion that's before the commission, and refraining from making opinionated remarks at this time. We will have plenty of time to do that when we deliberate on the docket. So are there questions from the commissioners for clarification on the motion that's?
Is there an answer to my question?
Mr. Molnar, you have used up your time. Are there any other questions from commissioners? Okay, I'm going to move into mine. President Wellborn, go ahead.
Just a clarification question for Mr. Green, please. Mr. Green, in your testimony, you made mention of 3 new contracts. I'm assuming those are large load customers. I mean, I think you probably drilled down far enough through the rest to answer that, but just to clarify that for me, please.
Madam Chair, Mr. President, the 3 contracts at issue are 2 contracts with Energy Keepers and 1 with Bighorn Electric Cooperative. So those are not large load those are not retail contracts. Those are wholesale contracts. At least one of those entities was an existing wholesale customer of Northwestern Energy. We've made sales to them in the past.
Okay, thank you.
All right, thank you, Commissioner Wellborn. All right, are there any other questioners, Commissioner Bukacek, questions from commissioners?
I'm going to submit my questions in writing. You
Okay.
said that was an option, correct?
That is an option, but we're going to have to do it rather quickly. So staff will communicate out that time frame for getting those questions asked and then answered from parties. And all the parties will be included on those communications with when questions from the commissioner sent out.
Madam Chair, before you ask your question, could I make one important, there was an issue raised by Commissioner Molnar, and it was actually raised by MEIC, which I should have addressed. And
Mr.
that is, we have, upon advice of our FERC council, we have decided to eliminate placing these assets into a separate subsidiary under the utility. So the Avista assets will come directly into the utility. The 222 AV asset, which was noted in a footnote, and I think maybe in some of our other submissions to the commission is no longer, we've determined it's no longer needed to preserve our voting and will not be an issue in the case.
Thank you. Philip, will you reset the time for me? I will succumb to the same time limits as the other commissioners. All right. Question for Mr. Green on page 2 of your motion, and I don't think you need to flip there because this is a pretty easy question, but you refer to, in part 3, crediting the customers back if the revenue from these designated contracts exceeds your O&M costs. Can you please specify, are you speaking of the PCAM customers, the retail customers, when you say customers will receive the credit? Which customers are you talking about?
We are speaking about all of the customers who are subject to the PCAM rate, which is our retail customers.
Okay, thank you. And then regarding the costs, estimated maintenance and operation costs of $18 million a year, which you're attempting to try to recover here without subjecting it to the regulatory lag of a regular rate case. When do you anticipate that $18 million or the O&M costs, whatever they may be, would be subjected to commission prudency review?
Madam Chair, we believe they could be subjected to prudency review as part of the PCAM. We intend to track those, submit these as part of the PCAM, and they would be part of the typical PCAM true-up process. Before they become part of our permanent rates, we would have to come in for a general rate case.
All right. My time is finished, and I think that wraps us up for today. And commissioners, if you have a specific question that will help you gain understanding of this motion before us, please confer with our legal staff on it relatively soon. And we'll get those refined, and we'll have staff present the questions in the proper format and distribute out to the proper parties. All right. With that, we thank the parties for your participation. The oral argument is now closed, and the commission will take the motion under consideration at a future work session. We anticipate mid-January for that work session. And the time is now 11:28 a.m. The oral argument is now adjourned. And on behalf of the commission, we wish you all a happy holiday season, a Merry Christmas, and a Happy New Year. And we'll see you back probably mid-January on this matter. Thank you. We are adjourned.
Thank you, commissioners.
Same to you. Thank you.